Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is the Dow hit 20K whoop-de-doo plus updates. This is for the week of January 30th, 2017. Took a week off last week from videos because we were just churning around here, and I didn't want to just keep saying the same thing, which is I expected us to break 20,000, but I don't expect it to stick. Now, if you signed up for my email list, and got a lot of new people signing up for that list, and if you didn't, you can go to attackthemarkets.com and get on for free. I did send an email out saying that I've lightened my stance a little bit, that if we did break 20,000, that we wouldn't stick, right? So I was pretty firm saying we're going to hit 20,000 and we're going to turn it around. I said I lightened my stance. I still believe that this is not going to hold, at least the first time through, because, again, I have to continue to say I can't believe everybody's sitting here going, well, as soon as we get to 20,000, then I'm going to start to buy. I mean, it just doesn't make any sense. Again, market isn't run on sense, though, right? So it's run on supply and demand, etc. All right, anyway, so we did break out above 20,000. We did close the week, above it. I also said in the email that I sent out to the list that, like I said, you can get on by going to attackthemarkets.com, that I wasn't just going to sit here and immediately start shorting once we broke. That doesn't make sense either. Okay, for this to be a trap and for me to be confirmed correct that because I'm thinking this is a trap, we have to go back below 20,000 and stay back below 20,000, okay? So we pushed up, now we have to come back down. And again, that may lead to just more chop, but to really make any money out of it, you need it to break 20,000 and then come through the bottom of this consolidation here. So, look, it's very tough to predict, and it's very tough to sit here and say, yeah, now that we're above 20,000, we have to fail. I mean, it's kind of silly to say that. The bulls obviously had enough in them to bust it here, but there are a few reasons that I just don't think it's going to hold. One of them I already said, which is I just can't believe now this is going to usher in new monies, flying in. All right, well, just got to get above that 20,000 barrier. I mean, it doesn't make any sense. It's new highs. That's number one. Number two is the VIX. Okay, and the VIX is at a very, very low number. If you go to, let's see, we can go to the monthly chart. Where are you? Okay, so the VIX closed the week, or actually it's at the close, right, as of this month, January, and there's still a couple of days to go, but it's been the lowest it's been in years. See how far we can go back here. All the way back to this 05, 06, 07 area, right? So, I mean, this is, that's 10 years here. It came down, it kind of kissed it down here for a little bit. And, of course, like I said, there's still a couple of days left. There'll be 2 days left to see where it closes. But, I mean, the VIX is really stretched to the downside. Now, this is showing a lot of complacency, and the challenge with trying to fade complacency is that it can go on for a lot longer than people expect it to. Okay, fear is mean reverting. So that's why when you see the market spike down, the VIX spike up, you see a lot of the V's, the V, right? Fear and a V, fear and a V, fear and a V, fear and a V. But you don't really see that from complacency. Right? You see the rounding bottoms and then a spike, and then the rounding bottoms and then a spike, and then even here, a little rounding and up, a rounding and up. So, I am watching for this to resolve itself and perhaps get a bounce. And increase in volatility is correlated with a pullback in the market, but I don't think it just comes out of nowhere and just starts rocketing higher. It could, but again, we've seen it usually likes to round out. That's what complacency tends to do. And nothing saying it has to do that. We could absolutely continue like this for a while, but it's probably getting really close to the VIX, getting at least some sort of a move higher here. And that, like I said, would be correlated with the market pulling down. Let's look at the rest of the indices. I'm going to use the ETFs now. I used the cash Dow. Let's use the ETFs. So the SPY at new highs. Looks like it's pausing here. The Russell, it didn't quite get to the new high that was made in December, but not really doing much wrong here. Can't really sit here and say, oh, look at this. This is, screaming short here. No, but it'd be nice if it was at new highs to confirm. Mid caps were at new highs, but they pulled back. Like, this could be a potential mini trap, right? There's no real ugly spike down. So, it was down 0.5% on Friday. So it's not like you're sitting there going, oh, look at all the late the anxious buyers getting trapped here. No, it's like a mini trap, right? A real trap would be a swipe through, more than likely, this range. Okay, so that's the mid caps. And then the NASDAQ, wow, just going and going and going. Very stretched here, so we have to watch that. Let's look at a couple of stocks. Apple, Amazon, it looks like on a test of highs. The Alphabet, aka Google, hey, look at that day on Friday, right? You see this bearish engulfing pattern, right? So pulled up and then something like that. See, that could be a trap. We don't know yet because, look, it's still above this previous resistance, which is now support. So this could just be a pullback, and then it could rotate off of that. Let's do like a Netflix. Yeah, looks like that wants to try to go higher. Let's do the Facebook. Looks like it's headed to new highs after it had this pattern right here. Let's look at some other indices before we go into more stocks. So semiconductors rocket and rolling, looks like headed to 1,000. Remember what I said in the last video about this, that it looked like it was potentially diverging. Okay, well, let's go back to the stocks here. That, hey, it had it didn't quite get to the new high here, so there was a potential problem, and then we draw the line under here and see if it gets the break. Well, instead, it just went higher. So that's fine. Okay, banking index. It's consolidating here. Well, let's look at some semis real quick. Here's NVIDIA. All right, you can see looks like it wants to head back to the highs. Here's Intel with the reversal candle on Friday after it pushed out of its pattern there. Okay, but like a Micron. It looks like it's up at the highs. Okay, so banks. Let's go back to the banks. Consolidating here. Like a JP Morgan and a Citigroup Citigroup's actually showing poor relative strength. Here's Bank of America up near the highs. Here's Northern Trust, a little issue here, this consolidation. Here's Zion. Here's Bank of New York, also showing some relative weakness. So, what do we care about the relative weak stocks in the group? Well, if we do start to pull back, and if we don't just bust out here with the banks, those are the stocks you want to focus on. You want to focus on the weaker stocks that are setting up in consolidations. How about the broker-dealer? Right up at the high, it's starting to pull back here. Goldman Sachs pushed into the middle of the consolidation here, and then it and then it paused. So see what it does from here. Okay, sorry about that little interruption, and probably forgot where I was. So rather than start over, so Goldman got the bounce off the 50-day, went back to the middle of this range, and see if it falls back. All right, let's look at we'll look at Morgan real quick. Morgan looks better out of the two, but they both don't look terrible. Let's take a look at some stocks like Caterpillar. Nice push up here out of this consolidation. All right, so you got this. Whoops. You have this here. John Deere popped out of its consolidation here. So a lot of nice, strong stocks, and some of them that are losing some of their strength. So that's what if you're looking to take advantage of the short side, that's what you want to look for. But the strong ones, I would just be, okay, stay out of the way until they show signs of topping out or have a reversal candle or something like that. Let's take a look at gold and the miners. So gold had a nice bounce starting the middle of December here. Went up to the 116 handle. It's starting to back off a little bit. The miners, yeah, I guess you could see they were a little bit stronger here. They're holding up a little bit better, but they're both still weak and still forming lower lows and lower highs for now. How about oil? USO, interesting. Just been sideways for a couple of months. And consolidating here, though, they should pop one way or the other. If gun to the head, since they're above the key moving averages here, the 50 and the 200, then they're properly stacked. Okay, the moving average stack here, then I'm looking to see if it can break out here. But again, the consolidation takes precedence over which which direction. So it's saying, hey, you know what, volatility trumps direction. So we got to, no pun intended there with our new president, but we got to look for a move one way or the other out of this. So to recap, we are above 20,000 on the Dow. I don't think it's going to hold. I think that we are going to pull back. I don't know if it's going to be a massive trap or just a pullback into this range here. The VIX is pretty low. The VIX rising correlates with a pullback, so the fact that the VIX is pretty low suggests that it could start to get a rally. Again, don't know if it's going to be in a V shape, because usually the bottoms, I mean, they have these little mini Vs, but mostly to get a real nice move off the VIX from lows, it usually takes a little bit of consolidation here, a rounding bottom before it starts to try to move. All right, so let's do some updates on some stocks I've been talking about. UNH pushed down initially out of the consolidation, but is now right back here. So what we want to do is we want to let me get rid of this and see if I can move this. Yeah, I'm not moving it that well. There we go. Okay, so that's the new consolidation here for UNH. So we want to see which way that goes. PVTB, which is Private Bank Corp Inc., did push out of its consolidation, but it's not running away or anything. And it's a little bit, not going crazy. Prudential, same kind of deal. Pushed out of this nice, whatever this was, month and a half long flag, but yeah, hasn't really gone crazy. Lope, Grand Canyon Education, didn't do much. DeVry, consolidating up here. Let's see what it does. The first move was okay. Now pull back, see if it gets another move there. Core, which was Core-Mark Holding, food distribution, they went the other way. That's why you always wait for triggers. Very tough buying in consolidations. And this is just yet another example of it. Just went out the bottom. And then here is Keko Environmental. You could see it consolidated here, pushed down, and now it's bouncing back to previous support, which is now potential resistance. So let's see what happens. Join the email list at attackthemarkets.com, and you'll get more frequent updates than just the once-a-week video. Any questions? tiny@attackthemarkets.com. I wish you well this week, and I will talk to you in next week's video.